Hey Bowtie Nation, Joseph Hogue here, and a video you've been asking for. What is the infamous death cross in stocks, and is it good or a bad thing? You see this stock signal popping up all over lately, from stocks to crypto. Everything seems to be in that death cross, but no one really knows quite sure if it's good or bad. So I'm going to turn it over to the resident stock trading expert, Thomas Carvo, for a great tutorial on what is the death cross in stocks and how to use it to make more money.
What's going on, everybody, and welcome on into the video. So today we are examining the death cross. Now, this naturally does not sound like a positive thing in the stock market, right? Death cross, just the name itself probably says step away, go out all cash, you want to go short, right? But in this video, I want to dive deeper into the death cross. We'll talk about this indicator. We'll talk about what it really means so that when you see it on CNBC or you see it in the news or you see it in articles that are starting to populate more and more, as we're seeing this indication now popping up across the S&P 500, the Dow Jones, the NASDAQ, even the Russell 2000. We're seeing this pop up. So when you see it, you want to have a better background, a better base, so that we don't make an emotional decision based off a headline. So first, what is a death cross? Well, a death cross right here, by definition, is a chart pattern where you have what is a shorter term moving average crossing below a longer term moving average. Now, I do want to mention really quick, we talk about these moving average, we talk about how to set them up and charting and all that good stuff in the technical analysis course that Joseph and I put together, which we will link in the video description, but I'll have more on that later. But a short-term moving average is going to be a little more volatile. That's going to be moving a lot closer to the price action of that stock. For example, the 50-day moving average is going to take an average of pretty much the past 50 days of trading, where a 200-day moving average will take an average of the past 200 days. And so you can see if a stock's made some wild moves, the 200 will be nice and smooth, whereas the 50 might be a little more choppy, a little more bumpy, because it's taking into account a shorter time span of some of those moves. So when that 50 moving average crosses below the 200 on a daily chart for a given stock, for the S&P, for the Dow, the NASDAQ, we're just taking into account each candlestick will be 1 day. That's what the daily chart means. Now that's where we have a death cross. Now the flip side is a golden cross. When, let's say, the 50 moving average crosses back above the 200 from below, that's a golden cross. And these crosses are commonly talked about. Everyone likes to talk about the golden cross, the death cross, especially, it gets clicks, right? It gets clicked and it gets your attention. But we need to understand that these are lagging indicators. So these crosses happen after moves have already been made, okay? So we have to take into account the past 50 days, the past 200 days to get these averages. And so if the 50 crosses below the 200, that means that the past couple of days, past couple of weeks, more specifically the past couple of weeks, right, have shown some weakness, and we're seeing stock prices go down. So it's already happened to get the cross. Now the key takeaway here is that just because we got the cross doesn't mean we have to go lower, but it's an indication, obviously, of what's already happened. And now, can it give us some insight as to what's going to happen in the future? Let's dive into some recent examples going back over the past 2 decades. So here's a chart going back to 1998. This actually takes a picture from 1998 all the way through 2007, okay? Now, this is a chart of the S&P 500 ETF, SPY. It's going to model the S&P 500. So what we're looking for here on this chart is that blue line to cross below the red line. And so when have we seen this happen in the past? We had one death cross here in late 1998 that was then followed by a golden cross only a few weeks later in 1998, so a very small blip of a death cross. Then we had a substantial death cross. This was one that we saw in late 2000, and the bottom actually came in late 2002 into early 2003. That's where we saw in 2003 the golden cross finally occur and us bouncing back for more sustained upside. This next chart gives us a broader view from 2008 all the way to present day. So we got a pretty big time span in there. But what do we see right here? We had another death cross in early 2008 that was then followed by a bottom in early 2009. And then we had that golden cross a little bit later on in 2009, mid-year, early to mid 2009. And then we had some more sustained upside. Then from 2009 all the way through, let's say, 2019, 2018 or so, we didn't really get any substantial death cross. We had a couple, but those were very, very short-lived. We had a brief one in 2010, a brief one in 2011, 2015, and then even 2016, but those were all bought up very, very shortly within a few weeks. Even dating back, we had some in 2004, 2006, prior to 2008, but those were again bought up fairly fast. We then had more of a substantial death cross here in late 2018 that was quickly bought up into 2019, and then of course 2020, the more recent example, which a lot of us remember, which is when we had the pandemic, and then that was a substantial pullback, but it was a very short-lived pullback, which was then quickly bought up within a few weeks again as well. Within a very short period of time, we were back up with that golden cross. So what do we take away from this? That's the biggest point of this video. What's the takeaway, right? That's what we want to know. What is the takeaway from the death cross? What we want to see for a death cross is we want to see a stock, or let's say the S&P 500, the NASDAQ, the Dow, whatever index you like to look at. We want to see that death cross, but then we want to see a continuation of that death cross, okay? So this is not an indicator to look at as a day trader on a day-to-day, oh my gosh, it's a death cross, I need to be short everything. No, now what you want to see is as we are crossing right now, we are just beginning a death cross right now on the S&P 500 when we are filming this video. We want to see, is it short-lived? Is it sustained? And does the price action bounce followed by fails? That's the biggest key inside of a death cross. So we're looking week to week, month to month, not day to day, week to week. Okay, we're talking week to week, month to month, bigger picture. Are we still downtrending? Is that 50 daily moving average staying below the 200? And as it does, that will continue to confirm the downtrend, the sell-off, the bear market that we are in going forward. So these death crosses, while yes, they are definitely lagging indicators, they have signaled some of the bigger bear markets we've seen over the past 2 decades. Okay, going back to early 2000 and then going back to 2008. Those are some substantial declines that we saw for over a couple of weeks, over a couple of months. They were not very short-lived, but at the end of the day, we've seen the death cross happen many, many times over the past couple of decades, and in those times, the majority of these situations have actually just been short-term pullbacks, short-term corrections that were then bought up in the coming weeks and months after. So the key again is going to be that confirmation. Do we continue to see the 50 SMA staying below the 200? And the longer it does, the more confirmation that we have that we are still in a bear market, that we are still in a decline from the highs that we saw a few months back. Now, there is one more thing I do want to mention really quick when it comes down to a death cross. We were looking at the S&P 500 in this example. The NASDAQ, the Dow are going to be fairly similar, but when it comes down to individual stocks, this is where this indicator could be a lot more useful because individual stocks have a lot more volatility up and down. If you were to take a look at Tesla, for example, this is Tesla's chart going back to 2015. We actually see a bunch of death crosses here on Tesla's chart, but a lot more volatility. So these death crosses followed by bullish crosses, the golden cross, we see a lot more of this, and we see that Tesla respects this quite well. And we actually kind of see is as of late, actually in 2021, that 50 moving average never really crossed below the 200 moving average, and it acted as support. So that's what we're kind of looking at for individual stocks. You can utilize these indicators for individual stocks to have potentially bigger moves than the S&P, than the NASDAQ, than the Dow, as they're going to be more volatile. Because, for example, the S&P is taking a collection of stocks. And so inside of that collection, there are stocks like Tesla that could be significant outperformers in bull markets and then significant underperformers in bear markets. And that's what we want to look at to take advantage of some of those individual stock moves. So the death cross, the golden cross could actually be a lot more useful on an individual stock that could have substantially more upside and downside after those crosses. And then in terms of the overall markets, you want to see continuation, but we have to understand that this is a lagging indicator, and it's really telling us that, hey, there's been some negative momentum in terms of a death cross over the past couple of weeks. Now you want to see, does that confirm? Are we in a broader scale, longer term bear market or decline? Or does that golden cross occur to send us back higher and potentially even to new highs, given the positive momentum? So if you want to go deeper into technical analysis, learning different indicators, learning chart patterns, support, resistance, this is yet another great tool to add to your tool belt when it comes to stocks, investing, and even trading stocks on a shorter term approach. This is a great tool. We'll link that technical analysis course that Joseph and I put together in the video description down below. We cover a lot more where that came from, especially when it comes to building out trading plans and even bonuses on fundamentals, market psychology, market cycles, all of that good stuff to make you an overall better trader and investor. Take a peek at that if you guys are interested in the video description. Hope to see you guys in a future video. Make sure you are subscribed to the community here. Love to have you. Have a great rest of your day.